What's going on, everybody? Welcome back to another video here. So in this one, we have a lot of very interesting information to cover and prepare you guys for this next week's trading week here. So we're going to be going over exactly what to look for in the market, especially after the craziness that we saw at the end of last week. Now, again, there's a record amount of put volume coming into the market right now, which tells us some very key things, which we will absolutely be covering. We're going to touch on the dollar and the 10-year treasury as well. And if you guys have been in the live streams, those have been a very, very key component of what we are using to gauge market sentiment and where the market could head in any given day. We also have calls for emergency rate hikes now over in Europe. And we also have to go back into the situation with Goldman Sachs that we were talking about last year. There's been a lot of comments and statements made on the internet about exactly what Goldman Sachs is doing, but a lot of people are getting this very, very wrong, and I want you guys to understand exactly what is going on in this marketplace here, because it could be an indication of a turning point coming over the next essentially 6 months to a year, looking at these timelines here. So if you guys do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and hit that notification bell so you're notified every time I post one of these videos. So when we come over and take a look at the market here and you look at the SPY on the daily time frame, again, we all know by now we had this cross down here and we saw nothing but pretty aggressive red on this 4-hour time frame. Now, I do want to put SPY here on this daily time frame really quickly, and again, you're seeing something very, very similar. Now, there's a couple of key levels that I want you guys to look out for. One, the previous low down here, this right around, let's see, 362.19, 362.17. The previous low that we made before we started making our way all the way back up to around 431. Now, there is this very key level here, this double bottom on the daily, almost a triple bottom here if you consider this little flash candle under and then a rally back up to 431 over here. This level right at around 372.50 is going to be pretty important. We talked about this and it was very surprising that there were no significant buyers to step up and defend that level. What does that tell us? Well, it means that large institutional money, even retail investors at this point after Jerome Powell, were not willing to step up and put their money where their mouth is and buy the dip that we were seeing. So there's a lot of fear right now in the overall market right now, and we're going to talk about this in a second, but that put volume coming in shows that the overall sentiment is incredibly bearish in this market right now. Now, what did we see the last time that we saw all of this put sentiment coming in? Well, we saw that little gamma to the downside, and then the market started to rally. So it's very, very possible that we see either this bounce back up here to this 372.50, or if you put this on the 4-hour time frame, 374.50 would be the next level that I would look at here, and that's the 13 EMA on that 4-hour time frame. It goes right along with those rims with that 13 EMA on all of these time frames here. Now, looking at the dollar here as well, it's showing no signs of slowing down. When you do see a little bit of a decrease in inflation, when the Fed raises interest rates, when you see all sorts of different wild things happening with foreign exchange and other currencies, you're going to see the dollar continue to spike like this. And again, you're seeing the 10-year treasury yields absolutely skyrocket. And we've talked about this this concept of TINA, there is no alternative, a couple of times here. And that's something that you guys need to keep in mind. The 10-year treasury yields have not been this high since 2010 or 2011. Now, when we think about the overall marketplace here and the Fed is going to be continuing to raise rates, well, it doesn't make any sense right now that the 10-year treasury yield would slow down unless you were to see a lot of buying volume coming back into these treasury yields, because when you see a lot of demand coming in for these treasuries here and you see them start to get bid up, it suppresses these yields back down a little bit. So, and if I was a big money institutional investor right now, I'd probably wait in order to start buying these treasuries to see that full effect of reverse TINA, because these yields are probably going to go a decent bit higher as we see more rate hikes in overall market volatility going into the end of this year. But again, that put volume right here is really, really significantly increasing. So When you think about the market as a whole and options volume as a whole, ever since 2020, you've seen a very, very significant increase. Now, when there's more volume, more demand, well, you're going to see prices increase. So across the board, these put contracts are most likely going to be a little bit more expensive, and even the call contracts in some scenarios as well. Now, the thing that you need to be careful of here is that if you start to see this put volume and that negative delta really start to pick up on the overall market, it is very possible that this market maker hedging is either going to drastically push the market to the downside or reverse it right back to the upside if you start to see profit taking on a lot of these put contracts. Again, we're kind of at that situation back in the market now where we are seeing that kind of peak right here where you could easily go either way. And again, looking at the market here and going off of all of these principles of 1348, again, it is very, very possible that you get this retest back to the upside here or a significant sell-off. Again, that 360, or let's see what this exact level is here. It's 362.18, 362.19 is that level that you really have to be careful of before we start to get very nervous about seeing those new lows potentially coming to that Goldman Sachs price target we are going to talk about in a minute. But again, guys, if you want the best tools to be able to navigate this market here, our first algorithm that we put out, Trader Joe, is actually up 33% right now. And he started, I believe, back in March and April. So he has absolutely slaughtered the market this year. We have Pythagoras, we have Invictus, all of these algorithms, all of these tools, live streams, curriculum videos. They're the best place. They're the best tools that retail investors have right now, and we are the best place to come and learn how to trade. So if you guys are interested, make sure you check out that link down below. But I do want to briefly talk about this Bank of England situation, and this really has to do with the credibility of these central banking institutions. So Bank of England must do a, quote, large emergency rate hike to avoid total disaster, Deutsche Bank warns. So looking down here, so what is to be done to avoid a complete disaster? Well, according to DBFX guru George Saravelos, it's time for the central banks to panic and put ridiculous governments in their place. Specifically, the strategist writes in a note that a inter-meeting rate hike from the Bank of England as soon as next week to regain credibility with the market. Now, here is essentially what we're dealing with. We have inflation running out of control. We don't necessarily see unemployment numbers getting to those levels where they're going to be considered, quote unquote, dangerous for the overall economy to get pushed into that deflationary environment and really, really limit growth and push us deeper into a recession. But with what we've seen over these last 6 to 8 months, nobody really has any basically faith in these central banks, whether it's going to be the ECB or whether it's the Federal Reserve in the United States, to really get these big problems that we have in our markets under control, whether it be inflation, or anything else that we're dealing with right now, the energy crisis. So looking at this statement here, when you see these large banking institutions call for these emergency rate hikes, well, you have to think about it in a couple of ways. One, these emergency rate hikes are going to hurt their clients if their clients are taking on large long positions or trying to buy the dip. So them coming out and saying we need more rate hikes to get this under control is kind of sounding the siren here. But I do want to talk about this Goldman Sachs situation with you guys because that is what the title of the video is, and people just are completely missing the point with what Goldman Sachs is actually doing. So this was one of the articles that came out. Goldman throws in the towel, slashes S&P price target to 3,600, warns of a recession crash to 3,150. Now, if we're currently trading at around 368 on the SPY right here, and you could see levels at 315 or 360 over here, well, why would Goldman Sachs continue to hold long positions? Why wouldn't they just liquidate their portfolios and buy back in lower? Well, the thing is that they've already done this and people don't realize this. So in just 2 days after we reported that Goldman's chief equity strategist, David Kostin, launched a trial balloon telling clients that even as he still has a 4,300 year-end price target on the SP 500, well, we just hit it, buddy. I might recommend that you move that target. We already hit that 431 on the S&P 500. He saw the broad index tumbling as low as 2,900 in a recession when he commented that, and there is your bogey within 2 to 3 months right after the BLS covers the mistakes it had been making in its labor model and rectifies them, sending the U.S. into a brutal recession. Expect Goldman to slash its optimistic 4,300 price target to one at below 3,000 as a recession now becomes the bank's base case scenario. Now, the thing is here is that a lot of people think that Goldman Sachs is coming out and basically warning the public that we could be seeing more downside. That is not what they're doing at all. And a lot of other people were also saying that Goldman Sachs has actually been late to the party. That's also very, very incorrect. When we come over and actually take a look at Goldman Sachs' previous earnings reports and what they've done over the last basically 2 years, they've been selling equities since the second quarter of last year. Now, the market was still trending up over that time period, but they knew what was to come at the end of last year, that peak. When you see the Fed come out and say, we are going to start tapering our asset purchase, we're going to start basically running off the balance sheet and raising interest rates, these large banking institutions are not stupid. They are going to reposition themselves. So fast forward to today when the harvesting progress slide is back and shows the bank sold an additional $2 billion gross in Q4. So this article came out in January of this year and is referencing the fourth quarter of 2021. When you come down a little bit further, they are still selling lots of assets. So the bank sold an additional $2 billion gross in Q4, offset by an incremental $1 billion in purchases. So they did essentially buy $1 billion of assets and sell $2 billion of assets. But who is Goldman selling to? Anyone who will buy. But here we would wager that retail investors who were on tilt buying in 2021 have been the proud recipients of billions in Goldman sales, especially those reading the perma-bullish notes from Goldman's chief equity strategist. Guess who? David Kostin, the same person that we were just referencing. Curiously, Goldman's harvesting asset management group did not get access to those. This, in the financial literature, is called the distribution phase. So what does this mean in plain English? Simple. In Q4, Goldman continued to aggressively dump its positions, which are in the money in an environment that is, quote, supportive. Now, I want you to think about what environment we are in right now. It's no longer a supportive environment to be selling assets. So Goldman's already out. You, me, anybody that was buying assets in this time period back in 2021 when Goldman was doing this, any retail investor was providing Goldman Sachs with the exit liquidity in order to get out of these positions. Now, what are they doing now? Well, it's a little bit of a different environment. Now, when you see Goldman Sachs come out and say, well, you could see these super, super low levels on the overall S&P. Let's see here, that 3,600 or that 3,150 and maybe even that 2,900 level. They're not telling you that they're liquidating now. They're telling you where they might want to start buying back in and providing that buying liquidity to essentially catch people who are trying to sell out of the market out of fear as we see the market coming down. So Goldman is essentially saying here, well, we're already out. We have cash sitting on the sidelines. These are our levels that we're looking to essentially just take all of the cheap assets that people are going to be willing to dump out of fear. Now, hopefully, with you guys learning how to trade in this market here and how to make money in this type of marketplace with us, well, you're going to have a good indication of where essentially markets are going to go, where they're going to come back up. But again, you don't really want to get caught in being Goldman Sachs' exiting or even entering liquidity. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I'll see you guys in the next one. Hope you're having a great weekend. Peace.